I'm like a massive advocate for Rentvesting, and it's not because I can't afford to buy my own home. I could buy any house that I wanted.
You can see the polarity between
the joint I lived in was probably worth $15 million. It's costing me $3,800 a week to rent, which is not a small amount of money.
I call Jack, and this is the problem with the advice that you're giving to the public. Most often it's incorrect. The primary place of residence is arguably your best strategy for those that are investing in a rising market. There's no other platform where you get tax-free dollars.
We get the juice. Yeah, we get the juice. Rentvesting versus owner rock.
Correct.
Yeah. Again, there's no right or wrong. You know, in Perth, when you can buy a house for $2, sure, owner rock makes more sense. You live where I live, and it makes 0 sense unless you are spending cash, unless you're buying a property for cash. To live where I live, you're spending minimum $10 million on a house, and if you want something really good, you're spending $15-20 million on a house. Like, to buy something like that, even if you went in with a 30 or a 40% deposit, to have a mortgage of that size that you're paying for with after-tax income, to be a business owner as well, and if you're a PAYG employee, there is certain ways you can minimise your tax, but you know you are sort of hamstrung to an extent. Having tax deductible debt is a really good way to minimise your tax bill. But when you run a company, anything that you own personally, you have to push out that amount of money to pay for all those personal expenses. So you think about, let's use me as a scenario, and we'll use round numbers. Let's say I earn $1 million net for the year, okay? If I kept that in my company, I'd pay 250 grand tax on that mil. So I'd end up with net 750. The only money I would push out of my company would be money that I'd need to spend on food, living, a bit of living expenses, say rent. But let's say I push out 100 grand out of that, and I pay the top-up tax on whatever the tax rate is on the 100. And the rest of the money stays in the company. So now I've paid for my rent, I've paid for my fuel, and I've paid for all the things that I need to pay for, and the vast majority of my money has remained within my company structure. Then from there, I go and invest that money. I'm being way more tax effective on the money that's in the company, because if I pushed it all out to myself as an individual, if I had that big owner-occupier mortgage, I'd pay another $220,000 tax on that.
But you got to pull it out eventually, unless you're just going to sit in the company.
You pull it out when it starts generating income. So that's what a lot of people don't understand. The only reason we invest in assets is to one day have those assets pay us so we don't need to go to work. That's the truth, right? You don't invest in real estate to sell it one day and have lots of money in the bank and look at it. You always have to have that money working for you. So with your own home, eventually it will be debt-free, there's no doubt about it, but a debt-free home doesn't mean you don't have to get up and go to work, because it doesn't pay you. So one day you will sell that property and then do what with the money? Invest it in something that will give you income.
Yeah, like a commercial asset.
Or anything. Yeah. Most people go through their life, they get the home, they sell it down, they put a big chunk of it into super, they buy an apartment by the beach and they retire. I just do that in reverse. I go, well, I'll rent for a quarter of what it would cost me to own that same property, which means I need to push out less money from my company to myself as an individual to be able to pay for it. Way more of that money stays in my company. I then invest the net amount of money into investment assets that one day I won't sell. They'll start producing me income, and then I'll push it out of a company from an income point of view based on how much I need to live on. If you run the numbers on that, properly run the numbers on that over a 30-year period, the tax saved on the income versus the potential CGT that you would save on a sale of an asset that you will one day invest the money in, they're worlds apart, worlds apart. And I don't say this stuff because it's controversial. I say it because it's like genuinely true.
But then I suppose you're not going to caveat every bit of content you put out. But again, Derek and Shirlene listening to your content.
Des and Shirlene. People in Perth have weird names.
But your average Australian, which we often speak to, clearly that's not the market you're speaking to, see that information. They then go and sell their primary place of residence on that advice, and then go and get an investment and get taken down a garden path and buy in Darwin, for instance, because they're like, Rentvesting's only strategy. That's where I think that information is misinformed for, I think, the majority of Australians who, in the right market, be that Perth, probably be that Darwin
But
now.
I don't necessarily think it is the right information either, because, again, it comes down to the outcome that the people want, right? And if the outcome that the people want is income, buying your own home is the furthest place from that. Buying your own home will never give you income. And a lot of people, they don't conceptualize this. They're like, I want to pay my home off to zero. It's a great goal. It's a very, it's like wives' tale, like you can't have any debt, you need to be debt-free. But it still never gives you anything. So one day you need to invest to get you the outcome. And the harsh reality is most people wait too long to invest because they don't want to invest while they've got this big owner-occupier mortgage because they have no cash flow.
They take on too much debt for their home.
That's right. So then they get to 45, 50 years old and then they go, 10 years away, we want to retire. How are we going to retire? And most people are attached to their home. beautiful for the last 20 years. So I think that if people took this strategy for a long time, if you rentvest for 4 years and then go this and buy my own home, it doesn't work because you don't get the long tail of the investment. But if you said, hey, I'm going to rent for the next 20 years, and with all the surplus cash that I save, I'm going to invest. You could grow a larger portfolio. If you look at serviceability between an owner-occupier and an investment, you can generally service maybe 2 or 3 times more without using structures. If you just use, majors to begin with, then went down the non-bank route, you can grow a way larger portfolio that will one day then get you the outcome, which is it'll grow to a position where you've either got enough capital or it's producing income. And then if you want to go buy your own home, you can. But by that stage, the home that you probably buy will be way different to the one you would have bought when you were in your 30s anyway. Like for financially savvy people, I don't think there's a comparison. There is definitely like this stigma around, and sometimes I get caught up in it. Like I find myself scrolling realestateanddomain.com looking for a sick place in the east. And I'm like, why do you want to do that? It's just my ego getting caught up. I want to go, I want to be in the papers, say Jack Anderson bought a $20 million home. And I'm like, I don't need to do that. I can rent one whenever I want to rent one. And I just keep doing what I'm doing. And I'll be way, way wealthier than what I would be if I had the home. So that's genuinely my take.